Hello, Mark Sturdy here with highlights of this week's 7 days ahead multi-asset technical strategies week beginning the 18th of January. If we look at the summary, we'll see that we remain bulls of the dollar against the euro in particular and the yen. We have no strong views in the S&P, Euro Stocks, FTSE and Nikkei, the stock indices. We're bulls of most, but we'll come back to that. Long-term bulls of most, but we will come back to those. And we remain and excited about being bulls of the US Treasury note and oil. Let's just go through the ones we're feeling strongly about. The euro, the dollar-euro. There's the long-term charts. The failure to get back through these resistances from the 06s, 07s, 08s, 10s and 12s. The market has failed and turned, and the driving force behind the turn, and not the turn, but the ongoing bullishness for the dollar, bearishness for the euro, is this structure here, a double-headed head and shoulders, which calls it down a minimum move to 109, 110, 109, minimum. There has been a pullback, but while this resistance, important strong resistance, remains above in the daily chart, we remain confident that our structure is not in any jeopardy. We are also bears of the yen. This is the long-term chart. This is the medium-term chart. An ascending triangle, driving the market on, completed, driving it on, acting as good support on any pullbacks. We think this goes better. There is some short-term hesitation, but we don't regard that as important. Very good support beneath the market from 112 downwards. I'm going to come back to stocks. Let's just talk about the ones we're very excited by, and that is the other one is the US Treasury notes. There is not yet a clear break above this prior high in the monthly yield chart. We need to wait for the end of the month before we can confirm that. But the medium-term chart is very strong for higher yields. It's a completed triangle. It completed last week. This week, early days yet, I know, but it's going strong. This triangle calls the yield up to 2.3 minimum. The price chart is not quite a perfect mirror of the yield chart, but is nonetheless bearish. The market broke down out of this trading range, and now we have a resistance above the market. It looks bearish. We think it'll struggle to bounce back through these prior lows, resistance from these prior lows, bearish short term. The German Bund is nearly there as well. Should just say, we haven't included it in our summary chart of being out and out bullish. We've been a bit more cautious, but just to go through, this could well be a completed triangle. Yeah, not quite as clear as the US Treasury note. Here's the long-term break back through the big resistance from minus 2.04. We haven't yet closed on the month above that. This isn't quite as clear as the US T note, and nor has, in the short-term chart, do we have as bearish a situation in the bunds as we do in the US Treasury note. We need to break down through there, which might be a catalyst for high yields if the Treasury note can break down through 169.34 in the futures chart. So that's why we're not as out and out bearish in the bunds as we are in the Treasury note. And the other position that we strongly take a view on is the oil. We haven't had the monthly close yet, obviously, but it looks good and strong to have broken back through this long-term resistance where the market failed before in 2018. It looks to now that we have closed up here once before and it failed, so it's not entirely a cast iron sort of price action, but nonetheless for that certainly endorses our bullishness. This does too. This is again, we would ideally on the week to want to see a close in the weekly continuation in the oil above 85.41. We already have broken above prior highs in the March 2022 futures. Last week it closed, this is the medium-term chart in the March future. That has broken up above prior highs. I agree it's not as a long-standing break above the prior high here. This would be a huge additional boost. We are excited by this. We are excited by the potentiality of the monthly chart. And here's the daily chart in the March 2022. That too, we have good support in the short term. So the short to medium term March contract suggests a good break up. Continuation chart here and in the month would add to the bullish fervor, but we nonetheless feel quite relaxed in our bullishness in the oil. Going back quickly to the stocks, what is our situation here? We remain long-term bulls in the S&P 500, the Euro Stoxx 50, and the Nikkei 225, in particular the Nikkei 225, calling it way, way higher. There has been a medium-term and short-term pause. So far, there has been no hint of breakdown in this sideways price action in the weekly chart in the S&P 500. There has been good support from 45, 49, 50. Were that to break, we'd change. But there is a driftiness about the short-term price action. Whereas there has been a pullback here, indeed 2 weekly key reversals, there's been no breakdown here. There is equally nothing to get excited about in terms of going bullish in the short and medium term for the moment. And the same is true of the Euro Stoxx 50. There's been sideways price action. We need to see a break in the weekly above 43.92 to get excited. Similarly, in the Nikkei, we need to see a break out of this long-term sideways trading range. We need a break above 30.72 before we get excited there. It is worth pointing out the FTSE is bucking the trends in other markets, breaking up into this area above here, this price action here, which better seen in the weekly chart perhaps. We need the market to break up through 76.66 and 78.85 before we can get very bullish long term. But short term, medium term, there's no question, but here's the weekly futures chart. The market looks good. We've broken up above prior highs and are trending away. And here's the very short-term trend established. So short and medium-term trends in the FTSE, unlike the others, is good, but the long-term picture isn't yet good. So there's a slight reversal of what's happening elsewhere. Thanks very much.